is based on evidence. So if I say that the business used its resource well, you will ask me, where did you get that information from? Or what am I relying upon to come up with such an information? So when we talk of audit evidence, we are talking of information the auditor has gained and that has relied upon to come up with conclusion. Like, for example, when the auditor concludes and say that the document represents a free and fair position of the business, there is some information that he has arrived at in order to arrive at such an information. So that's on talk of excuse me, audit evidence. So when you talk of the audit evidence, we'll be talking of the information obtained by the auditor in arriving at the conclusion on which the audit opinion on the financial statements are based. So, and then when you talk of the audit evidence in auditing, it comprises of documents and accounting records of underlying financial and of the underlying financial statements. So when we talk of audit statement or audit evidence, we are talking of that particular information, those particular that arrive at the conclusion. So, and we say that this is composed or comprised of the records and financial statements that are prepared by the accountants of the firm. And these records include the records of initial entries and supporting records. We also have electronic fund transfer. You know, sometimes we usually transfer funds electronically. Currently, we have M-Pesa, we have Airtel Money, and other forms of fund transfer. We have even, if you are paying money outside the country, we have Western Union and the others. We have SWIFT, we have PesaPal, and others, PAL, and the rest. So those are some of the records. We also have the general and subsidiary ledgers, journal entries. I know you've covered that one in accountings. We also have things like records such as worksheets, spreadsheets that support cost allocation. Because you remember, apart from the financial accounting, I know you will be doing another type of accounting, which we refer to as cost accounting. There is another part of accounting called cost accounting or managerial accounting. This is now related with managing cost of an organization. So for cost accounting, we usually prepare the spreadsheet or worksheet that shows how cost has been apportioned in the various departments in various ways in an organization. Then another thing, other information that an auditor can use as an evidence is minutes of the meetings. You know, some things are passed in a meeting, either management meeting, either the general meeting, and in every meeting there is what we call the evidence of such a meeting. So when we keep minutes, we talk of the evidence of the discussions in a meeting. So minutes will also make part of the evidence. The other thing is the analysis of the report, the control annuals, any information, comparable data which compares the organization and the competitor, plus any other information that the auditor may deem necessary for the audit of the firm. Anything that auditor uses as an evidence for the organization, we talk of the audit evidence. So that's when we talk of the audit evidence. So then we say that the sources and the amount of evidence needed to achieve a required level of assurance is determined by the auditor's judgment. So what we are saying is that sometimes the auditors usually select various evidence based on their personal judgment. An auditor will uh, select one evidence, certain amount of evidence, another one will select another amount on their judgment or based on their consideration. Based what we are saying that an auditor, because we see that an auditor is a human being, and therefore he will be selecting evidence based on his or her own judgment or his personal judgment. What do we say? What do we mean by this? This is where the auditor will select evidence based on what he deems necessary, or what he sees as necessary. So we cannot state and say that an auditor will require a certain amount of evidence. So it's upon the judgment of the auditor. It's upon the it's at the auditor's discretion that he or she chooses the amount of evidence. So that's when we talk of the audit evidence and the much that is needed. So before we select the evidence must meet certain characteristics or certain qualities. So let's look at the qualities of audit evidence. What qualities, which characteristics must the audit evidence meet for it to be enough, to be sufficient? So we'll be looking at the qualities of audit evidence. So we are saying that according to international standards of auditing, number 500, that governs on audit evidence, it requires that the auditor should obtain sufficient audit evidence to be able to draw a reasonable conclusion. So we don't just get evidence, but we should obtain sufficient. Sufficient mean enough, enough evidence that you can draw conclusion from. And then after also getting the enough evidence, it should be also appropriate, not just a matter of correcting anything. Like for example, if I'm auditing let's say the accounts of a university like ours, Zitec University, and I carry evidence from, let's say, another university, a public university. You know there are several universities. I get an evidence from a radio station, from that is books of accounts of a radio station. Those ones are not, they are not appropriate. But if I get maybe something from maybe the radio station relating to our universities, it may be appropriate. So we are saying that it should be sufficient, and at the same time it should be appropriate. So what are the qualities of a good audit evidence? Number one is it should be sufficient. It should be sufficient. So it means that the audit evidence should be enough. When talk of sufficiency, it should be enough. That is, the evidence should be an evidence that we can draw a conclusion from, or we can make a conclusion from. That's when we talk of the sufficient evidence. The other one is that it should be appropriate. It should be appropriate. When talk of audit being appropriate, it means that the audit evidence should be able, should be related to what you are investigating. Like for example, if it is someone who is investigating the debtors, he cannot come with an evidence concerning, let's say, the liability. A debtor is not a liability, it's an asset. But if it's something to do with assets, that one would be a good evidence. So that's when you talk of it should be appropriate, it should be an evidence that covers the required areas, or it should be an evidence that is necessary. The other thing is that it should be relevant. When you talk of audit evidence being relevant, it means that it helps the auditor to to achieve the overall audit objectives. When you talk when you talk of the overall audit objectives, we mean that it should be able to meet the objective set by the auditor before starting the audit, because every auditor must have the objective that he or she looks at achieving. Everybody must have an aim that he is looking forward to achieving. And that's when you talk of such. The other one is that it should be reliable. Yes, a good audit evidence should be reliable. We are saying that that's when you talk of reliability of an audit evidence, it means that the evidence should be credible. It should be credible. That is, it should be something that you can rely upon, you can trust. That's when you talk of reliability. Let's look at those are now the other one is that it should be clear. The evidence should be clear. When talk of clarity, this means that the information that you've gotten from the books of account, from any other sources, it should be clear. It should be something that is to the point. You can we say that audit is an investigation, and you are not there when things were happening, but you have been asked to come and investigate. So you are making as an assertion from something that you don't know. So that's when we say that it should be clear. It's something that you can look at, you can understand, you can make judgment from. If you give another party, another person, and you tell him or her, this is the evidence that I relied upon, and they will still see what you used. So that when talk of the clarity, something that it is open, direct to the point. It is something that you can understand with ease. So that those are the characteristics of audit evidence. And so when an auditor is looking for an evidence, he or she should make sure that the evidence that he or she has obtained meets the threshold that I have stated there. So that's when you talk of the audit evidence. So that's when you talk of the character of audit evidence. To look at assertion in generating audit evidence. Yes, because we say that the auditor must generate evidence from one, from the account, to from organization, or maybe okay, so you can use things like media reports to generate the evidence, and the evidence that he's using, he usually makes some assertions. So we'll be looking at assertions that an auditor makes when generating the evidence. So one of the assumptions, so we are saying that when preparing an audit evidence, assumption number one is assumption about hinting of transaction. assertion on hinting of transactions. And number one of those assumptions is that occurrence of transactions that have been recorded have occurred to pertain to the entity. Yes, so because he is using some documents, one of the evidence is what we call the written evidence, and one of the assumptions that he will make or he will have to make is that the evidence that he or she is using relates to the organization. It's something that relates to the organization, not something that is outside the organization. Number two is that there is some completeness. There is an assertion of completeness, meaning that the evidence obtained are complete. Excuse me. Ma'am, ndikirathi tutukitie kwamba ukihurahurira. Sawa. For that, I was disconnected. I'm currently using a phone, and the phone that I'm using is the one that I'm using to access the portal. So when someone calls me, I am disconnected on your side. Sorry for that. Okay, so I was talking of there is an assertion of completeness, meaning that the accounting information represents the actual information of an organization. It is complete. Like for example, if we're looking of the balance sheet, it is the balance sheet that pertains to a certain period of year. That period is complete, and everything concerning assets, capital, and liabilities of a firm are well recorded. That's when we talk of that, when we talk of completeness. Another assertion that we have is that is what we call cutoff. And what we mean by this, you mean that is that the transactions and events that are recorded in the evidence are recorded in the appropriate accounting period. So what we mean by this is that the transactions and events relate to the year with which the auditor is checking. Like for example, if an auditor is auditing the books of account for 2019, all information presented relates to that year. You know, sometimes you might have information, but it does not relate to that particular year. So doesn't talk of such. The other assumption is accuracy. So, and we are saying that the information that is presented is accurate. That's another assumption. The information that you have is accurate. The other one is that classification, and we see that the transactions and events have been recorded in the correct period, and they have been classified accordingly. So what we assume is that whatever has been recorded as assets are assets as per that particular period, and they have been recorded clearly. Whereby when you talk of being recorded clearly, is that all assets have been brought together, all liabilities have been brought together, and so on. So that's when we talk of assertion about hinting of transactions and events for the period at the audit. That is number one. Number two, we have assertion about account balance at the end of the year. Yes, that's assertion number two. Number one, we are looking at assertion about hinting of transactions and events for the period at the audit, and we've discussed them. So number two, we'll be looking at assumptions about account balances at the year end. So number one is that one of the assumptions under that is that there is existence. So what we are saying is that the assets and liabilities that have been shown in the balance sheet, that have been shown in the accounting records, are assets and liability that exist at as at a given date. If you say as at 31st December 2020, there was this number of assets. The assertion that is made is that those assets were there, those liabilities were there. That's when you talk of the assets or liability exist, they are in existence. Now that and mean by that is that all the rights were followed duly, and also the obligations were followed well. So the rights and obligations were well followed. That's when we talk of the rights and obligation. The other one is completeness. When talk of completeness, we say that we mean that the account balances were also complete. They showed all the information. All the information was well presented. The other one is valuation and allocation. It means that the correct valuation for assets and liabilities, or the value through which the assets were shown or the liabilities were shown, it was the correct value, value, and the allocation was done well. So that is when we talk of assumptions about the account balances at the year end. So number three, we have looked at the first and the second assumption. The third and the last assumption is assumption about presentation and disclosure. When we talk of accounting information, you know that when we prepare balance sheets, when we prepare income statement, what we are doing, we are presenting. We are presenting financial information in a books of accounts called the balance sheets, the income statement, or the profit and loss account. So when we talk of presentation and disclosure, we are talking of what has been presented in the balance sheet, what has been presented in the income statement, and what do they represent. So what are the assumption about the presentation? Number one is occurrence and rights and obligations. So number one is that when talk of occurrence and rights and obligations, it means that the disclosed events and transactions have occurred and pertained to the entity. So what we are saying is that the information that has been presented is the correct information for that particular organization, and at the same time this information occurred. So that's when we talk of the assertion and the presentation. That's the assertion on the presentation. Number two is on completeness. It means that everything that has been disclosed or that has been shown in the books of account, it is they were all complete. So every information was noted, was taken into consideration. Nothing was left. Everything that was necessary has been disclosed. That's when you talk of completeness. The other one is measurement and valuation. So I had talked of this one, and we are saying that everything that has been presented in its correct value. The correct value, the correct amount of an asset was recorded there. That's when we talk of measurement and valuation, and that's when we talk of that one. The other one is classification and understandability. So when you talk of presentation of accounting information, you cannot just present anything like that. Like for example, there is a format which we prepare the balance sheet, and this format through which we prepare the balance sheet, it is a common style. You cannot come up with your own balance sheet and you tell me because I'm from Mount Kenya or I'm a Kikuyu, Kikuyus prepare their balance sheets in this way. No, if I have to prepare a balance sheet, I must prepare a balance sheet in a certain way, in a certain format, in a certain platform, in a certain way, so that everybody who knows how a balance sheet looks like will be able to understand whatever I have presented, because we prepare those particular statements so that they can be led, so that someone can also rely upon them, can understand the information that has been presented. So let's now look at methods of obtaining audit evidence. Methods of obtaining audit evidence. Do you have a question so far? Do you have any? I want to see whether we are still together. Do you have a last session? And having confirmed that you can hear me, I can now go on without any worry. So when we talk of, I have taken you through audit evidence. You've known what is audit evidence. We've looked at methods of obtaining audit evidence. Now, that's where, sorry, we've not looked at methods of getting audit evidence. That's where I want us now to focus on. So number one, on methods of obtaining audit evidence is on inspection. Inspection, this consists of examining record assets. This is where the auditor himself tries to check, to look at the documents that he has been provided, to look at the assets that he has been given. He has been told that they are the assets of the organization. Like, for example, if he's told that there are 25 buses in an organization, so a good auditor will go ahead and check whether the 25 buses are there, and also check whether they are working, because he can be told there are 25 buses, but none of that bus has an engine. They are just shells that cannot work on their own. So to prevent such an occurrence or such a situation, an auditor will go on and check. So that's when talk of inspection. The other method is through observation. Observation, this is where an auditor comes and just sits somewhere and checks how the people does their work. Like, for example, if an auditor wants to check on how workers report to an office, how workers, maybe whether they sign the clock in, clock out book, a good auditor will sit somewhere and check when workers are coming and see whether they are signing that book. If not, he will make his observations, he will make his recommendations even on that or what he has seen. So in talk of the observation, we are saying that this is when the auditor himself looks at the procedures being performed by others or by workers, like stock taking, workers coming into an organization. That's when talk of the observation. The other method is inquiry and confirmation. Yes, when talk of inquiry and confirmation, this is where an auditor seeks information or from other knowledgeable person, maybe inside and outside of the organization. When an auditor does an inquiry, this is where an auditor wants to know what is happening and why is it happening the way it is happening. It doesn't talk of inquiry and confirmation. Like, for example, he might want to know how many debtors are there in an organization, and therefore he will send what we call debtors circularization. A debtor circularization, it is a letter, it's like a letter written to a debtor to confirm whether he owes the organization any amount of money. And if yes, he quotes the amount of money. That's a good example of inquiry and confirmation. Now, after being sent to the secularization, a data will confirm and say, maybe, yes, I'm owed to this amount of money, and I'm expecting to pay them by this time. That's when talk of data's secularization. It is a way through which an auditor may get an information concerning the data. The other one is recalculation and performance. Yes, sometimes the auditor may not trust the figures that have been provided by the accountants, because we say that from the beginning, an auditor is an accountant. When when accountant goes to class, he's taught the two things: to be an accountant, and at the same time, he can also be an auditor. So because an auditor is an accountant, he can do what an accountant does. So what they do, they will recalculate and reperform what an accountant has done. And if he had doubts on the figures or information provided, he will raise maybe his voice on whether the figures are correct or not. That's of recalculation and reperformance. The other one is an use of analytical procedures. So when talk of analytical procedures, this is where an auditor just try to check the thread with which the books of accounts have been prepared. Like for example, if an auditor if an auditor is trying to look at let's say the books of account for the year 2019, he will look at whether there is a significant fluctuations or whether they are following a semantic trend, or whether the trend that they are following it's okay. Like for example, if you are looking at the books of 2019 and you find that the business made a loss of 10 million. In 2018, it had made a profit of, let's say, 1 billion. And in 20, let's say, 17, it had made a profit of, let's say, 800 million. And the business has been making profits. Only in 2019, it made such a big loss. You shall note there is some inconsistency. So, and you raise a question: why did it behave like this? You know, you've seen maybe trend of the other years, they are like profit, 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 which has been increasing. All at once, it has decreased to a negative. So you have to look to ask a question. When you do that, you say you are performing an analytical procedures. The other way that an auditor can obtain an evidence is through the submissions or reports from the third parties, and workers and the employees. Yes, sometimes an auditor can generate and get reports from what other people are saying and what the employees are doing. When talk of third parties, these are people who are maybe like people who are doing closer businesses. Like if you talk of like in a university education, if you are maybe checking the books of account of Zitec University, you can compare maybe with what Riara had. Because if you know, an industry will tend to behave the same way, even if the profit and the numbers, the population may not be the same, the trade may be somehow related. If in other universities there are some students who are being enrolled, you are also expecting the same to be there as the Tech University. So doesn't talk of such. So doesn't talk of the analytical procedures and all that. Now let's now look at something else, and we look at using the work of an expert. Using the work of an expert. When an auditor he's doing his auditing work. Sometimes he might not get some get information on himself alone. For example, if an auditor is auditing a legal firm, he might not have the knowledge on law. If he's auditing an engineering firm, he might not have knowledge on the engineering work. So, because of that, an auditor may consult an expert in that field. If it is like in an engineering firm or company, he can consult an engineer to help him or her understand maybe how the concept that he cannot understand in the engineering company that he is auditing. So when that happens, we say that he's using the work of an expert, or he's analyzing information based on the argument of an expert, or based on the information he gets from an expert. That's when we talk of using the work of an expert. And I've given example like a curious scientist when you are doing valuation, legal interpretation, measuring work for engineers and others. Yes. So let's look when you are when deciding on whether to use the work of an expert, the auditor should consider the following. One, the materiality of an item. Before you consider using an expert, if the item that you're using is not material, and you remember in accounting, I know you've been told of materiality. Something that is material, it's something that can alter or can change the decision of the user of accounting information. If it cannot, if something that cannot be used to change the decision of the user, we say that it is not material. So for something that is very material, you can use an expert. If it's not material, there's no need of using an expert. The other one is that the nature and complexity of the item, including the risk. Yes, you have to look at how complex is the item that you are checking. Is it so complex? Is it how much risk am I having if the information is not interpreted well? Or if I don't get the interpretation of an expert, how much risk do I suffer from? So you check on the risk that one is likely to experience in such a case. The other one is the audit evidence available in respect of an item. You have to check whether there is an evidence that is available. Do you have evidence that an expert can rely upon, or the expert can use in order to make a decision? If yes, you can consult an expert. If no, there's no need of consulting an expert. So that's when we talk of the audit evidence available. If there is no audit evidence, there's no need of consulting an expert. If there is, you can look at that. Now let's look at factors to be considered before relying on the work of an expert. Before you rely on the work of an expert, what are you to consider before that? Number one is the skills and competence of an expert. Skills and competence of an expert. You have to look at how competent, if it's a lawyer, how many cases has he won in a court of law? How many, maybe if it is an engineer, how many consultations has he ever given, and how many have been successful in that particular regard? So you look at the skill and competence. Maybe how many years of experience do this particular person has? Has he ever been consulted in such a work? Has he ever done such a work again? If yes, how many times has he done such a work? That's when we talk of the skills and competence of an expert. The other one is objectivity and independence of an expert. Yes, when we talk of objectivity and independence of an expert, we are asking, if you give this expert work to do, will he carry it correctly? Is he someone who is independent? When you talk of someone who is independent, is someone who gives his or her opinion independently. He does not rely on other people for him to come up with a judgment. So we talk of independence. If he's an independent person, you can give it. And we remember we also looked at ways through which the evidence, the independence of a person. In this case, we are looking at the auditor can be altered. The same things can alter the independence of an expert. Like, for example, you cannot go and ask maybe the cousin to the accountant to be an expert. You know that one will, any information that you'll come up with, it is information that is likely to favor the accountant because there is some family connection. So that's when we talk of the independence. The other one is say that the source of data to be used by an expert. Yes, when the expert is giving you in his or her opinion, where is he or she getting the information from? Where is he getting the information from? Where is he getting his narration from? That's when you talk of the source of the data used by the expert in arriving at his opinion. Is he getting the first-hand information? Is he coming from, is he getting information from primary or secondary data? So that's when we talk of the source of the data used by an expert. The other one is the assumptions and method used. Yes, for this expert to come up with this information, which methods did he apply to arrive at that? Or he just thought, he didn't not even apply scientific methods to come up with the information. That's when we talk of the methods and assumptions made. Did he some assumption? Some of the methods that we come up with, there is some assumption that we make. Which assumption did he come up with, and how did he develop these assumptions? Doesn't talk of that. The other one, let's now look at those are now the factors to consider before relying on the work of an expert. Yes, so those are some of the factors that you'll have to consider. The last thing, let's look at communication with the expert. How do we communicate this expert? We've said we rely on the work of an expert. How do we communicate with them to inform them that we will be using their work or will be relying on their work? How do we communicate with them? I want us now to look at communication with the expert. We're saying that now, when consulting the expert, the auditor should cover one. When you are now looking at the expert, or when you are consulting an expert to give his or her professional advice on what you are looking at, the expert, the auditor should, one, the objectives and the scope of his work. Which areas will the auditor need the expert to cover? Because you'll have to give him the limits. I want information covering from this point to this other. That's when we talk of the scope and the objectives of the work. The one is an outline of the item the auditor expects to be covered by the report. Yes, he'll tell him, I want you to, if it's let's say an actuarial scientist, I want you to give me valuation of services in the houses, the premises in an organization. That is a scope. He'll give him a scope, the area that he wants, the area that he wants the auditor to cover. That's when you talk of the items. The other one is that the intended use of the expert work. You don't just consult an expert like that. You'll tell them, I want you to give me this information so that I can develop an audit information from that, or an audit evidence from that. You'll give them the intended purpose of that particular work. The other one is clarification of expert relations with the client. Yes, You'll have to note whether the client is related with the client at any point. Not only the normal relationship, like what you call the blood relationship, like cousins, sisters, and others. You also check whether such an expert is also a business partner, a client of the maybe the company that you are auditing, because even that one will also affect the work. The other one is the confidentiality of the client information. You have also to check if you involve the expert, will he expose the client information. You remember we say that a good auditor should ensure that whatever happens between him and the client whom he is auditing must remain confidential. It should not be disclosed just like that. So he must also check the confidentiality of the client information, so that the client's information should not be exposed just like that. The other one is the assumptions and the methods the expert intend to use. Which assumptions will the expert use? Which methods will he use to come up with the information? So we come up with, we talk of the assumptions and the assumptions that will have to be made by the client. That's when we talk of such. So that is it. The last one is the record of any further information as audit evidence. So he'll also require maybe the expert to give any information. If he finds any information that is necessary for auditing part, he can also record such an information, and it shall be used for auditing purposes. So that is it when you talk of the audit evidence, and it covers those particular sections. So I want you now to raise any question that you might be having, or any point that you may be having. The ground is now